What happens in reality, we actually turn around this $100 million of active liquidity for about 4.4 times every month, which is about 50 times a year per origination. And then there's 50 times a year for the paybacks. So for every $1 million actually of liquidity creates about $100 million in volume, right, on both ends, origination and payback on the ecosystem. That's why you see close to $5 billion of total volume, and we're projecting end of year being around $10 billion or so.
Okay, I think we're live. Well, good afternoon. Welcome to an episode of Bitcast. I'm your host, Jason Kam, APA at Maple Leaf Cap. Today is June 12th, 2025, 12:30 p.m. Hong Kong time. Bitcast is being live streamed to Bit Club members. Questions are from the members and my own. This is not financial advice. Today, I'm speaking with Richard and Erbil, the co-founders of Huma Protocol. Guys, welcome.
Great to be here. Thank you, Jason, for having us.
Yeah, it's the first time I did two co-founders at once, so this will be a fun one. We have the
actually it's the first time for me as well. I have recorded a bunch of podcasts, but this is the first time team up with Erbil.
That's fun. It'll be really good. So we see your metrics out there, in your Dune dashboard in the public domain. That is about 90 to 100 million of TVL. We know that you have lent out about $2.5 billion of lending volume and recruit all of it without any default. Can you just bridge for us on how you think about turning that sort of TVL base into volume, into ultimately sort of the cash flow and revenue for Huma? Can you kind of just bridge that for me?
Yeah, sure. But Jason, before we jump into that, can we have the opportunity to share our philosophy about TVL? We have some reaction to that term.
Sure, please.
Okay, all right. So we actually create a total vanity leaderboard. Right, TVL serves its purpose in token in DeFi 1.0 because that's a way where people lock their capital in certain protocols to show their confidence. But ever since then, honestly, it become a burden, and many projects are forced to chase for TVL, and they get a lot of capital they cannot use, and they actually they cannot use, and they later become a burden for them. And in our case, we always believe in capital efficiency, and when we build a Huma protocol, we always think about sustainability. When you think about sustainability, you think about long-term, and also short-term, you think about capital efficiency. And that's why we only want to raise the capital that we think we can use. So that's why we call it total active liquidity, TAL, if you look at our dashboard carefully. So there is one letter difference, but that's a critical difference. So at this moment, we have about $100 million total active liquidity. Most of them we deploy into something we call the PayFi. Payment financing. We use this capital to enable all kinds of payment transaction settlement. Normally it takes 3 or 4 days. We use this stablecoin based settlement solution, make it go a lot faster. And majority of the capital is put in there. We probably have about 80%, 70 to 80% of capital deployed into all kinds of use cases. Then we also have another 20 to 30% we deploy into high quality, low risk DeFi opportunities such as Aave and Camino. This is mainly to meet our LPs redemption needs because PayFi assets usually take about 3 months, in locking the capital. But if we got to have enough cushion for people to finish redemption. So Erbil, you want to add more on the how do we?
Yeah, turn the total active liquidity into productive use, which you saw, as $2.4 billion in origination and about that much in payback. So total about, close to $5 billion in total PayFi volume. So if you want to break it down further, we have two big use cases. One is the settlement liquidity for cross-border payments, and the other one is settlement liquidity for stablecoin backed cards. So those are the two, use cases. And the settlement liquidity for cross-border payments is our bigger use case. So the use case the origination use case here is that we actually call this transactional credit, and it's get paid back in about 2 to 6 days. What happens is, think about an example cross-border payment institution as Western Union. I collect as Western Union $10 million today from people who want to remit that to Mexico, and I need to settle that $10 million with my distribution partners in Mexico. What I do, if I'm a PayFi platform partner, I tap into the liquid assets, stablecoin assets, to actually settle immediately with my distribution partners in Mexico, and it takes me about a few days to turn around that money I've collected and on-ramp it to pay back that USDC liquidity back, right? And then I can rinse and repeat this as many times. And what happens in reality, we actually turn around this $100 million of active liquidity for about 4.4 times every month, which is about 50 times a year per origination. And then there's 50 times a year for the paybacks. So for every $1 million actually of liquidity creates about $100 million, in volume, right, on both ends, origination and payback on the ecosystem. That's why, you see close to $5 billion of total volume, and we're projecting end of year being around $10 billion or so. And then how about yield and revenue, right? You asked.
Yes, please.
So maybe Richard, you want to take that one?
Yes. So from yield perspective, you think about this one. We charge business borrowers. They're more like different fintech companies and financial institutions. We charge them somewhere between 12.5% to 15%. And so that's you use
Annualized.
that one. You think annualized. And so you don't do the transaction level. Of course, each transaction level, when the capital deployed, they probably charge them on a bips basis for our customers. And in our case, but we charge them annualized from APR perspective. So with 100, and then some of the capital, as I said, we deploy into PayFi side, into the DeFi side. Then the yield is lower, like 8 or 9%. Blended, you look at about 12%. With $100 million right now, we are looking at $12 million annualized revenue. And from yield perspective, so that's really how much we our income side. Then what's the cost? So we get the LPs can participate in our pools in two modes. One is called a classic mode, where we pay 10.5% at this moment, plus some token rewards. And also you have a maxi mode, where the LPs choose not to take any stable yield, and they only get rewarded by Feather and the token. So at this moment, 40% of people choose to be classic mode, 60% in the maxi mode. That means 10.5 times 40%. Our actual borrowing cost is 4.2%. This leaves us about 7% net interest margin, and that's very, very put us in a very, very good situation.
Got it. So that's about 5.5% spread, which is like you make like $5 to $6 million of
7%. Right, 12 minus 4 something, 7%.
Got it. Wow.
Yeah,
okay. So that's like 7 million. Okay.
Yeah. So basically, you think about 100 million every year. Your net interest, margin would be around $7 million. And then, of course, from here you can continue scale the size from 100 million to 500 million. And of course, once you scale, probably more and more people, some people will move down to the classic mode. Your cost may be higher, but your margin no longer becomes 7, probably at least 5. So that's still very, very healthy domain for us to be.
That's the spread you're talking about. That's net interest spread, between what you're gaining versus what your cost of borrowing is.
I see. Sorry, and just so I understand this, so like 100 million of TAL, of which right now you are keeping 20, let's call it 25 million of it just in DeFi, 75 of it in like the business that you run. You turn this 4.4 times a month, so a velocity of 50 times a year. That 75 to 80 million becomes about 5 billion of transactional like lending, which you'll get back. So that's how you get to the 10 billion number.
That's
right.
Yeah.
And then all of this blends to maybe 12.5 to 15% annualized.
Annualized. Yeah.
Okay.
But when you do the annualized, you use a capital capital to do the calculation. Use 100 million to do the calculation instead of a few billion dollars transaction volume. Yeah.
Yeah, that's right. Okay, so that's how you get to like maybe 12.5 to 15 million of annualized revenue, and the DeFi yield is lower, of like 8, 9. So the actual business, you probably charge 5 bips a day or something. That's actually 15 to 20% type of fee that you can charge on the vendors you work with.
That's right. For example, our underlying, biggest partner is ARF. ARF, they charge 5 to 10 bips a day.
Okay. Wow. Okay.
Yeah.
That's a good business.
Yeah. Typically 6 to 10. Yep.
Got it. And on your liability side, because 40% of that 100 million is like maxi, so they're not getting any yield.
60%.
This one, 60%.
60%. Okay. Oh wow. So you're 60%. Really paying interest costs on 40 million of that 100 million. So you're basically, and that 40% is like 10.5%. So it's like call it 4.5. Okay. So you do have like 7. Yeah. So you have a net interest margin. You have a net interest margin of 7 to 8% on that 100 million.
Yeah. Yeah. Right now we feel it's in a good business.
Yeah. How do you, when you think about your path of scaling it from 100 million TAL today to, let's say, 500 million over time, what's a timeline of that scaling? How fast can you get there? And how do you get there? Is it still the permissionless, everybody aping, or is it from other means?
Yeah, there are multiple different ways this is going to scale. So I think the most important thing to talk about is, what we're focusing on is not to just, scale this to $2 billion or $5 billion of active liquidity right away, because we have strong principles that we are protecting, which is sustainable growth of the assets with low risk exposure and sustainable yield with very high utilization of the capital coming in, right? So those are the main principles of how we grow. And on our side, which is kind of like our regulated entity through which we serve the TradFi and the payment institutions, we are dealing with mostly tier 1s and tier 2s, which takes a bit of time to onboard, because these are large institutions. You need to prepare them from treasury operations perspective. You need to get regulatory clearance and then deploy them, and not necessarily deploy them at where their demand is. You deploy them from the basis, and then you monitor their work and then their whole operations to make sure everything is working very smoothly, and then you scale them over time. So with that, we can easily grow that business to 3x, 5x, even maybe 10x by the end of next year. So that's kind of like the span we're looking at. There's a lot of alpha here in terms of the planning, because if we decide to actually create a more balanced yield opportunity, right now, our yields are more shifted towards like LPs, and we provide one of the best yields on chain. You can actually scale even faster, right? So with the macro interest rates going down, actually we can scale a bit faster because we have this spread opportunity in between. And on the second side, on the card partnership side, even though it's right now a relatively smaller portion of our total volume, we have some very large pilots going on with some of the biggest players in that world that drives trillions of dollars of volume, and it can quickly scale us to hundreds of millions of dollars in active liquidity once those pilots mature to a point where we become the de facto platform. They onboard stablecoin based cards, or they onboard the settlement partners on the acquirer side, merchant acquirer side, to settle in stablecoins, right? So that's like one of those pilots maturing and getting to scale, where we think is probably going to happen around early next year, is easily a few $100 million of active liquidity and a lot of volume that comes with that. And then on the last, I think, opportunity is some of these also big PayFi assets that are established with more than $10 billion in AUM are looking to actually partner with us and come onto our platform to get DeFi distribution and other benefits by being on our platform, and they obviously can add up a good chunk of asset volume. So again, like what we have can scale easily 5x, 10x by end of next year, but these new opportunities, both the pilot and the partners like that, established partners like that, can add up like order of magnitude more volume to the whole platform.
So what Erbil covered is more on the asset side, more on the the demand side than on the supply side. So the liquidity side. Right now, honest, our whenever Huma says we have new cap, and people are chasing, and usually within a day, the cap is filled. So this supply is very, very strong on the DeFi side. But meanwhile, we also have large, financial, large TradFi players give us term sheet. We need to do 100 million, those type of neighborhood of, deals. And I think we have a few of them lined up. And right now, at this moment, we focus on just still consuming what the DeFi capital towards in the next few months, we're going to gradually open door for TradFi to come in.
Interesting. There are a few questions, and some of these growth initiatives I do want to hit on because they're quite important. Just on the liability side first, when you look at maybe 2-3 years, assuming the demand side like gets you there, what do you think the composition of the liability would look like on that 500 million? Is it like mostly crypto native capital, or is it like TradFi taking most of it, kind of like Cantor with Maple? Like, what do you think that 500 million will look like in terms of composition?
I would say that's really depends on the risk profile for the demand side, and because so far reality is that we took a very conservative approach. We only take on tier 1 and tier 2 type of players. Our risk is very low, but since we are as a smaller brand, we're a relatively new brand. So that's the market does not treat us, okay, your asset is a super, super safe asset. So the market is still treating us as relatively new, relatively risky. Once you reach to, 300 million range and people say you have long enough track record, then they are going to see that part become, oh, this is actually pretty safe assets. And then from there, most likely your stable yield no longer at 10.5%. You get more close to the normal market, 8 or 9%. Then in that case, you can actually get capital from all kinds of sources. I can imagine if you talk about 500, at that moment, most likely half.
I see. Okay. So it's kind of like DeFi natives gets you to 250, 300, and then right as that happens, it's going to turn on and Cantor and,
okay. Exactly. Then after 500, most likely the TradFi will play a bigger role.
Got it. And this is all hopefully happening by the end of next year.
Yeah, our target, 500 million.
Our target is at the end of next year.
Of the $4 to $5 billion of lending you're doing today, how much of that is this kind of cross-border transaction versus credit cards, like today, currently?
Yeah, it's about 90% is cross-border payments. It's our biggest volume because that's where we focused on, and that's why we also merged with ARF last year. It was our kind of like killer app and fastest growing use case on our platform. And then card is where we are looking to rapidly grow because it requires, a bigger build out to really plug into these big networks.
Yeah.
So right now we have Rain that's being powered by us, and we're looking to grow that. But obviously the opportunity on the network integration side is much bigger. So we think that by end of next year, the composition might be maybe 40% cross border, 40%. Card settlements on the acquirer and the issuer side, and probably 20% or maybe even more, depending on some of these big players plugging in on other, pay for assets.
Got it. Okay. And sorry, and you did say that to get to 500 million, you said that you can 3 to 5x your existing business that is cross-border?
Easily. That's like by end of next year, we can even probably 10x, depending on picking certain partners. Right now, we're lucky because a lot of our partners coming from trying Ripple first and then not liking it very much, and then onboarding with us and then sticking with us. And I think that's creating a word of mouth, and also some of our partnerships, with Circle and others, opening up doors with the new regulatory frameworks, being pushed around the world, making TradFi and these, payment institutions more comfortable plugging into our system.
Yeah, I definitely want to touch on all of that. Before we get to these business side of the topics, I want to narrow some numbers down before we get there. So 7 million of net profit basically flowing to the entire Huma. I guess what's your burn today with the labor
No,
and sort of the cost base, and then how do you get from that $7 to $8 million of profit to let's say a protocol treasury or like kind of accrual for
yeah,
the
yeah, yeah.
token?
So I think I want to add one clarification to your point about the entire Huma. This is only
Hmm.
Huma protocol portion. Huma protocol portion captures that 7 million. ARP still has their own margin captured. That's separate because that's more on the equity side. So on the token side, everything is captured on the Huma side. That's $7 million. On the human side, honestly, right now, our burn, if you excluding all the one-time listing fees, we're around the 250-ish, but with the foundation build out more, we expect that will go higher, probably burn rate about 300K a month. So you can imagine you will end up to be basically 300 as burn and 300 as more like adding to the reserve to the foundation. Half of them goes to
Got
the
it.
foundation reserve. Yeah.
Got it. So basically, you won't need to sell any tokens. You don't need to raise capital anymore. You kind of are fully self-sufficient at the moment.
From that perspective, yes. Unless we
Okay.
see major opportunities. Today we have one killer app of Earth, and we're also launching with the third parties. But tomorrow, if you see another major killer app that we think makes sense for us to build, in addition to the
Mm.
platform, then most likely that part, then we are looking for more capital. But with our current growth plan, we will be self-sufficient.
Okay, got it. That makes sense. Okay, so that's kind of I think in the very end, I'll also kind of we can talk about the token value capture and then sort of if you do
Sure.
hit your target. But back to the business side of things, I guess you did lay out three venues of growth. One of which is 3 to 5x your existing slate of business, maybe even 10xing it because of the demand that you see. The second part is this new credit card initiative. We'll touch on that. And the third part is, I guess, working with more partners doing potentially similar things, but tapping into your infrastructure, your technology, your source of capital, and so on and
That's
so
right.
forth.
Yeah.
That's right.
Is there anything else that sort of really, really excites you besides these three things that you want to cover first? Or we can kind of, take through this one by one.
I would say a platform. The platform has built to be very, very powerful. Initially, we saw that it's more like the on-chain lending platform, especially with all kinds of structural finance building for fintech, and we believe we have the most powerful capability. But turned out after Huma 2.0 built out, we found we have a new powerful platform that is basically the PST token distribution with all the DeFi integrations. So what happens when user deposit capital into Huma and they get a token, LP token called a PST, PayFi Strategy Token. Then that strategy token is integrated with Jupiter, Camino, RateX, Underlist, Meteora, and Orca. So all those are tied together. So that means this token itself has intrinsic yield, and that one is plugged into the entire Solana ecosystem. That means the Solana ecosystem see additional yield. That ecosystem become much more interesting. Basically, it's a flywheel already. We make that flywheel bigger, so everybody's welcome us. We become major player. So now this is more like we become the DAI of Solana, right? DAI bring a lot of energy into the EVM ecosystem. Solana is looking for something that can connect the real world yield with the Solana DeFi ecosystem. I think we are well positioned with that infrastructure. Then that basically comes with a lot of distribution power. Then a lot of DeFi assets, even some RWA assets wants to work with us. Right now we are saying, hey, we're going to focus on PayFi related stuff. But our capability will position us to be very powerful play.
Yeah. Do you plan to expand PST to like Ethereum anytime soon?
Good question.
I mean, like Aave and whatnot. It's quite interesting because the SUSD PT of Pendle like became this
Totally.
thing on Aave, and they're
Totally.
just
Totally.
looping
I
this
think,
thing.
yeah,
Yeah.
it's just a no-brainer, right? Like right now, we're just like building the whole thing, the whole ecosystem, and all the plugins into the DeFi ecosystem, so that sophisticated, LPs can leverage their positions, can have a very liquid, right, play. And that's where we built a lot of our partnerships on the Solana side and built the framework. It's very easy for us because we already partnered with Layer 0. on the Huma token to make it on the chain, it's ready for us to turn on, PST being available everywhere. And we have a lot of demand coming from, other ecosystems for that. And we'll do it at the right time. But right now we're just focused on making sure we are the de facto, assets on the LP asset on Solana side, and, become the DAI of Solana. And we're also seeing a lot of net new stablecoin inflows just because of us, right, into the ecosystem. We want to make sure that's like very established, and then go just replicate it at scale on other platforms.
It's a really cool initiative because, when it's looped appropriately with adequate YT incentives with Huma on top, it would seem to me at least the TVL from the DeFi native side shouldn't be a problem for a long time. I remember a while back we talked about 10.5% not being that exciting, but now if you can loop this with PST with additional yield on top with Huma, it's become basically. I would expect anytime you open a cap is when you have a lot of demand on your business side, so you need more capital, and right when you open it up, you should be able to fill it no problem. So in a sense, after the TGE, you should be at a phase where you should just be able to grow rapidly. Capital should not be a constraint for you.
Yeah, indeed, that's the case. And I was laughing, you said both Erbil and laughing when you said 10.5 is not as interesting. Go to ask people who invest in Huma pool. They will tell you a totally different story.
Yeah, well, the DeFi well is dry, so 10.5 is actually pretty good.
Yeah, actually, people some of them actually have made their sophisticated strategies more public on Twitter, and they generate way more than 10.5% using those strategies that you suggested, and way more than that, right? So we even have a TradFi investor who is creating an SPV just because they figured that there's an opportunity, and they're actually one of our big, token investors as well. They want to combine those sophisticated strategies and some of the staking strategies on the Huma side to create an SPV that is like a fully liquid for the LP base. And, they think they can actually quickly fill that up and bring that onto the protocol. And I think this is, to your point, proves that at least on that end, we don't have a constraint. The main thing is, get the best assets developed, make sure the risk, exposure is very low, and make sure the yield is very sustainable, right?
At what point, you don't have to say this if you don't want to, but at what point will Pendle and you have an official pool on Solana or Ethereum?
No, we already work with a Pendle similar product called RateX. It's already live. So basically all the popular DeFi play on Solana, we're already in.
Okay.
Different forms. Yeah.
Okay. This is more a Pendle specific question, but I'm aware. Right.
Pendle wants to do it on Solana as well, and we're happy to, once they are ready to deploy on Solana and do this on Solana, we're happy to do it. It's just before Pendle exists, there's RateX, which is a equivalent on Solana side, and all those strategies are basically already deployed on RateX.
Of course. And the last bit on the numbers, I should imagine all of the revenue and cash flow, and eventually after cost profit generating on the Huma side, there's no equity or token split here. It's just accruing to token holders over time.
That's correct. That's correct.
Okay.
Yeah. Good. Huma said you only end up with a lab and with a foundation, right? So it will all be captured on the token side.
Got it. Very good. And then, so let's talk about the business side. I think 3 to 5x or even 10xing your existing book of business that is 95% of your $4 to $5 billion of lending. I guess it's a two-part question. Kind of walk me through how you ramp that so quickly over the next 12 to 18 months, because that's a pretty significant growth. And then secondly, has the listing of Circle helped you in getting sort of that number there faster?
Yeah, very good question. So there are actually two different ways this grows, right? As we said, we focused on working with tier 1 and tier 2 for two reasons. One, obviously risk exposure is much lower when you work with them. But two, they have a lot of internal capacity to grow. They also don't want to put all of their eggs in one basket. They don't want to push all of the treasury operations, into this, stablecoin based settlements. They also like to start relatively, low exposure and then grow from there on. So just within the the client base that we have, that we serve, there is actually a lot of room for growth. And some of the growth is just going to come from planned growth that we enable on a monthly or quarterly basis for them, right? So that's kind of like what we know happens with the existing client base. And then we also know that there are different ways to balance the current yield with the macro changes, and that will enable a few other very big players to just like turn on the lights and start basically pushing more of their volume. And we know those players can easily double or triple, right, by end of next year, the existing volume as well. So combined together, that's where we're confident that we will see 2 to 5x easily by end of next year on the existing business, but maybe even the alpha is up to 10x or so on the existing business.
Why haven't the big players turned on yet today? So some of these logos that you're signing.
Look, actually, we do. Yeah, go ahead, Erbil.
Yeah, there are basically ones who already did that, right? So we have some of the biggest players that you mentioned. Circle, when they want to onboard a big player, they usually push us to help onboard them. Same thing happened with Solana Foundation when they want to onboard a big player on Solana Pay or on the institutional side. They push them to us to help them get onboarded, because we can really help them adopt these technologies without themselves having too much expertise in-house. So that's kind of like already happening. And then there are ones where they're either waiting for regulatory clearance, and in different parts of the world, stablecoins is still not like 100% enabled from a regulatory perspective, and it's a matter of time. We know like this is going to happen in the next year or so in different parts of the world. So then you're going to actually see them going live. And some of them are just basically waiting to just like negotiate and figure out like where they can replace some of their existing treasury operations and treasury capital with basically the liquidity that we're bringing in, right? So that's like why some of the cycles take actually longer, but we know once we enable them, it's very sticky.
Do you work with any partners?
Jason, just to add, right now on our table, we already have 3 actual very meaningful brands. There's only one of them they allowed us to disclose the name. That's Lulu.
Yeah.
And even when Circle launched their payment network, and they were one of the launch partners as well. And there are 2 other ones also very significant, but we cannot disclose their name yet. And some of them we're going to see scaling starting from next year.
Yeah. I guess the signing on of these logos, the conversations with them and ramping volume, has there been at any given time in the past like couple months or quarters, has this sped up? Because we noticed like the Circle IPO, we saw the Stripe acquisition of Brex, and now sort of Privy, and there's like a lot of moves. Do you feel like it accelerated? Like you couldn't get them to sign on like a quarter ago, now you can. Can you guys kind of walk me through the BD landscape today?
Yeah, maybe I can talk about the Lulu case since Richard mentioned that, because I think it's an important glimpse into the future, right? It's one of the largest payment players in UAE, and a couple of things happened at the same time, which is one, UAE created probably the most progressive legislation around stable coins. Circle officially launched in UAE with USDC, with Lulu being one of their biggest partners. And just that relationship from beginning to end and the scale, like it very, very quickly scaled on our platform, very, very quickly. So I think it gives you a glimpse of like when an institution is ready and bought into the stable coin based future, enabled by Circle's infrastructure, but also enabled by the regulators to actually double down on this vision. We see things ramp up very quickly. And then obviously there are regions where onboarding might take 6 months. Right? Because it takes longer for them to get ready, have the conversations with the regulators and get the, clearance. So those we believe, again, once the clarity is there from a legislative perspective, will accelerate quite a bit because, they're bought in from a BD perspective. As long as, you have the right structure that you're plugging in and the kind of, right solution to actually help their treasury operations not take too much overhead, they're bought in from a BD perspective.
Aside from Circle and Solana, who helps you, who could be working with you and helping you the most? I would imagine it's what excited us initially too, is that you guys actually go to Silicon Valley very often. You guys have extremely deep connections with the fintech ecosystem there. It would seem very clear to me that, maybe other crypto-native firms like ring up Stripe, ring up Revolut, that they wouldn't answer the calls, but when you call them, they would answer and they will work with you. Like, do you expect a lot of these kind of partnerships going forward with these companies and ramping up your business?
Richard, do you wanna take this one?
Sure. To your question, besides for the big players, besides Circle and Solana, we also partner very closely with Stainer, and especially and the actual bunch of our early customers were introduced by them. It's in their network. They are very well plugged in for cross-border.
For those who don't know, tell us who they are. For those who don't know, tell us who they are.
Erbil, help me with the pronunciation. I have trouble pronouncing their company name.
You mean Stellar Development Foundation? Yeah. So SDF, Stellar Development Foundation, is basically you can think about XLM as their thing. They are one of the earliest payment-focused networks that has a very interesting advantage, which is what they call anchor network. So you can go from stablecoins to fiat off-ramp by just basically making a transaction on chain. And they're one of the biggest partners of MoneyGram, and they have a lot of remittance players who basically operate on the Stellar networks if they want to utilize stablecoin. And PayPal just announced they're actually pushing PYUSD to also operate on the Stellar network as well. So they're a very much cross-border payments focused network, and they onboarded a lot of partners through us onto the network as well. And then there are a few of those Silicon Valley based players that I don't think we are able to disclose the names right now because of all the NDAs, but one of them is probably one of the largest payment networks out there, and once we prove these pilots, I think they will be a major channel partner because we'll be plugging right into their network.
Okay, that's all I need to hear. That's very good. And then of the 3.5 times ramp on your existing business, would you say it's mostly from your existing client base ramping up? Or would you say it already bakes in some big players turning on? Or another way to ask this is, if some of these players turning on, that's the sort of 10x bull case you talked about.
That's the 10x bull case I'm talking about.
Okay, yeah, so existing logos that you sign up already get you to 3 to 5x.
What we have in the pipeline right now that we're onboarding, plus the capacity existing partners can grow, is 3 to 5x.
Oh wow! Okay, very good. And this, if it gets, if it happens, it already gets you to that 500 million TAL target. This is completely excluding credit card. Okay, so tell me about credit card. I guess maybe walk me through just how big could that business look like, and what are you exactly doing in that business, and kind of walk us through that.
Richard, do you want to? Okay, go ahead, I can take that. So there are two different sides of the credit card settlement business. One is the issuer side, which is basically whoever is backing the card that you're paying with, and then there's the acquirer side, which is whoever is orchestrating the payments to the merchants that you're making payments to, right? So there are two sides of the network, and what we are doing is basically we're doing a pilot for this, and we're doing a pilot for this. On the issuer side, we started working with Rain, which is one of the early stablecoin backed card issuers. They serve stablecoin treasuries to issue cards, corporate cards usually, and these are all backed by stablecoins locked in a vault. And as they people use the stablecoin backed cards, someone needs to provide liquidity to settle on the Visa network that they use. Right, and banks don't do that because banks don't care about stable coins locked in vaults, and they have no clue how to necessarily provide facilities for that. But because this whole thing is on chain, we can create a fully closed loop, no counterparty system where all of those vaults are basically controlled from a payment access perspective and the liquidation perspective, while we provide liquidity that's backing those stablecoin vault assets to settle in the network, and then we get paid back as soon as those vaults are liquidated or the partner makes the payment back to the network. So that's kind of like the issuer side. We're enabling the stablecoin backed cards to settle with the network that they're operating on. On the acquirer side, the equation is slightly different, which is acquirers today, especially the merchants themselves who plug into the acquirer networks, they face a couple of challenges, especially in emerging markets. The time to get your money once somebody actually swipes the card can take easily at least a few days, if not a week or maybe sometimes multiple weeks. And this is terrible for merchants because they actually are disengaged from accepting credit cards. If they have a low margin business, and high cash flow needs, they need to pay for supply, inventory, workforce, and it's very hard for them to actually make it work when their cash flow is locked into the network. So we're working with a few different merchant networks to pilot something where when you actually swipe the POS, once you get the pre-auth from the issuer side that the person actually has the credit and can actually settle, we can just front run this transaction, right? The ping can come back to the Huma network and say, okay, I need to settle this much in USDC with this merchant network, and the merchant can see that as a balance, in their account without even knowing that they're getting paid in stable coins. And the networks can actually charge the merchant for direct access and immediate access to that capital. And that can actually create a very strong economy with, again, almost zero risk that you're taking, because you're not taking the issuer's credit risk. You're just basically fronting the settlement by creating this float and charging the merchants who want to access that capital immediately for that. So that's the merchant side of enablement, and we believe there is actually a strong business to build on both sides.
Which side is bigger, you think? I guess it's not a fair question.
I think eventually the merchant side is much bigger, I believe, because regardless, the stablecoin backed cards is going to be a portion of the overall card ecosystem. But more and more merchants will want to settle immediately, access immediately, and we can do it again without exposing the merchant to the stablecoin itself, as long as we provide the flexibility for the merchant network itself or the merchant bank itself, either directly adapting them to stablecoin or even using some of our fiat capabilities that we're building right now to directly actually off ramp into fiat onto their network.
And it's the Visa network or the MasterCard network that ultimately pays you that receivables you acquired from the acquired merchant, basically.
Yeah, we can get paid by the merchant or the Visa or MasterCard network, either way.
And that's interesting because it does seem like that one could be bigger. I guess, how do I ask this question? I'm not an expert in credit card at all, but at least my understanding is credit cards get declined all the time. I might not be able to pay, they get stolen. Do you feel like that's a risky business when you're taking payment financing for something like this? Yeah.
Just very, very clear about this one. We are not financing the credit card itself. We are financing the credit card transaction itself. The credit card issuer, they are financing the credit card. They take all the credit risk. We only do the transaction. They're supposed to pay, but because of the banking system just so slow, the credit card ecosystem moving multiple days, we just find a way to help you to settle earlier. But that money you're paying out will come to me.
Mm-hmm.
So that's where we are not taking any of those type of credit and risk.
Okay, that's exactly what I want to get to. Is the economics of this business similar to that of your existing cross-border transaction business?
I think right, early experiment, people are paying us very well. But when you're at scale, when large brand wants to put their logo on it, this is what we intend. We are not there yet.
But we need to be sure, but we cannot say because there's no comparable business today in the world, to really say it is right there. But we believe
the early experiment, the economics works well for us.
Mm-hmm. Got it. It's like a better business in terms of economics. The maturity does term out a little bit. It's not like for sure 2 to 6 days. It's potentially, weeks.
Yeah.
But you get compensated for it. Yeah.
Yeah, it's a benefit. Both of them are actually talk about it just 1 to 6 days. It's a very short duration. All those things we do is a short duration payment transaction financing. There's nothing to do, I know there are a lot of things, especially your audience, probably some of them in Asian, think about, oh, okay, you guys take a P2P, those are critical risk. No, we are totally different. We're only doing payment transaction. The payment transaction is going, it's just travel too slow, and we have a faster track for them to reach to the final destination and get that one done. But the money will ultimately come into us. So that's one. And what was your question back again?
Yeah, I guess just the economics there is in the cross-border transactions case, usually, and in most cases, is 2 to 6 days. There's no long tail, sort of months to get the money, right? But here, there's potentially times where okay.
I think still the credit card settlement network is a few days. It only goes that long
As
because
long as
we
we
don't.
plug into the network directly, the delay is
Yeah,
not going to be too much, right? The delay comes from multiple hops, people need to go through to actually get to the merchant account itself.
I see what you mean.
Yeah.
I
yeah,
see
yeah.
what you mean.
So because we don't deal with any real consumer credit card itself, we just deal with this transaction flow itself. Another piece I want to say, besides the economics factor, the other one is from LP, token holder, or whatever, our product side. People can feel, man, this one is much easier for me to understand than the
Yep.
cross-border payments one. I think that will give us quite some premium. That product from either from the LP's expectation on their yield because they perceive this will be lower risk than the cross-border payments. Although in our view, the risk is probably comparable, but they view this will be because they can easily relate to it. They will much easier to give more appreciation to our product.
I would imagine the existing payment networks would love you for that. Is there any competition doing something similar today?
Well, I think this
No.
is a driving force to disruption. Right? You think about today, obviously Jack has made his name on Twitter in the last few days. Erbil, right? He said,
Yeah.
stablecoin is not going to help. But I would say, yeah, sure. You ask a Kodak CEO, would say, yeah, we don't need a cell phone to take a
Ah,
video,
that's
take
rough.
pictures, right? It's rough, but I just need to see it this way, and I appreciate him. I appreciate him go to on a big stage to see it, and I'm sure he will learn. I'm sure he will learn. I predict within a year he will change his mind. If he does not change his mind, his company will go down in a few years. That's my prediction.
Okay.
Although they're
Yeah.
much bigger than us, but if he does not embrace, he will go down.
This clip, Richard, is going to get cropped, and then we're going to try to make it viral. It's quite funny.
I was going to say, you don't see Dr. PayFi this passionate about a
Yeah.
topic.
Yeah.
And
Yeah.
I know internally when, this tweet went up, obviously, like we're laughing at it,
Yeah.
from our perspective, because we see, the waves of adoption coming in and how crazy that is. And we see like big institutions telling us about their 50-year-old problems that hasn't been solved in the traditional Web2 or fintech world. And Richard was very eager to, just go and provide an opinion and a perspective on this because clearly we have strong reason to believe that to be.
It seems like compared to the cross-border transaction business, there are potentially alternatives where there are a lot of factoring firms potentially helping them as well. This is potentially no alternative. It's a kind of a new field. Maybe. And we all know that credit card transaction globally is a very big business in terms of trillions of transactional throughput.
$16 to $20 trillion. Yeah.
Okay, good, exactly. So on that note, like, how soon? I think you mentioned timeline. Like, what's the blocker? How soon can you spin this up? And then kind of tell us a bit more versus like the 100 million you have today, and like, what kind of a scope of this revenue generating TV opportunities this could become?
Yeah.
Well, let me first give a philosophical comment about what you just asked. Usually, people overestimate what they can achieve in the short term. They underestimate what they can achieve in a longer term. So I can predict in 10 years, majority of those will be T plus zero, no matter it's cross-border or credit card. So in 10 years, I can say a lot of business will be converted to be, will be enabled by stablecoin or other infrastructure from blockchain and settlement much faster than it is today. And in terms of next 1 year, I think it will take some time for people to get used to it and to really to grow that business. That's why our overall forecast for next year is just modest, 5x from here today. But most likely we'll be able to do better than that. But that's our forecast.
And it's modest in the Web3 sense, obviously it's massive for.
And the biggest blocker is just it's so new. You're building fresh technology for it, and therefore everybody's let's just make sure it pilots well. Is that the blocker?
Yeah,
I think cross-border we're at a scaling. Cross-border is nearly at a scaling. Right, cross-border, you already have major players adopted in our customer base, and it's just for us to figure out, how do we, as Erbil mentioned, any new customer wants to come on board, they have to go to set up all the banking relationship. They have to get their, regulation clarity. Those takes time. As we go through different regions, for example, we have several customers in Hong Kong. Where you are, we have several customers have been go through that approval process for months, and that's just reality. But as we get through it one region, most likely you're going to see more and more customers from that one region. I think that will help us to grow faster.
Yeah, like I'll give you an example, Jason. I was in Korea last week. I spent about 10 days, and when I was there, the presidential election was going on, and both candidates went on public to talk about how they're gonna, energize the economy by adopting digital assets, adopting stablecoin legislations, and follow Genius Act, and really push that forward because they are concerned about economy is slowing down, and they want to make the economy go faster. And Korea is already a big digital payment adopter and innovator, and they just want to push it to the next level. And when I was just leaving, the election happened, and then one of the candidates won, and that candidate literally a week later just pushed the bill that they had prepared into public, right? And like a discussion stage, which is like super rapid adoption on the legislation side. And I talked to the people who are actually working on the policy side on this legislation, and they told me like out of the top 5 payment players and financial players, at least 4 of them are looking for global partners to quickly adopt these solutions and plug in to provide this as a benefit to their users, and also to open up more to the outside, because Korea financial system is pretty much a closed loop ecosystem. They see it as basically a way to grow their businesses by opening up the borders, using the the borderless economy in some ways, and digital economy. And we're hearing similar things on the Japan side through our partners who have again helped Circle launch in Japan, and we plan to do an ecosystem launch event and get into some of those businesses. Like these things, to Richard's point, it's hard to predict like where they will be like a year from now on, but it's easy to see where things are going 5-6 years probably from now on. So that's why we're short-term expectations, but we're very bullish on any time horizon longer than 1 year.
Yeah. And this is a good segue on the third sort of big initiative. Like we talked about cross-border ramping as your existing client base and new logos. We talked about credit cards, a new initiative for you that will be probably really big in a couple of years. The third part is kind of existing, other players in this field working with you, tapping into your TVL. Like, kind of walk me through how that works.
Maybe it's a bit early to talk about the full picture, but maybe give you an example of like how this could work.
Sure.
There are actually people who have built assets with some on-chain exposure. The problem is those assets have zero distribution today, and it's just like a lot of things locked and not really very productive, not necessarily very discoverable, and it's not really built the right way into the DeFi, right? Like we spend a lot of time thinking about PSD and PSD, how it plugs into different strategies on chain, the Camino, the loops and the rate X and the pen. We thought about all of these, that creates this ecosystem around the yield-bearing LP token, very deeply, and we built a successful, example. And they're now looking at this and saying, okay, how do I plug into this, right? How do I bring my assets? How do I actually, make it work? And how do I, become part of this ecosystem? So we're thinking about this, as like, how do we take those, existing big pay for asset players and, plug them into the whole framework? And again, still very early to give names or talk about the specifics, but like one of them is more than $10 billion in size in terms of like assets they can bring on, right? So it's up to us in terms of like, where we can take it, how much of it we can, bring through this framework, or maybe how much more we can grow it if we, plug it in the right way.
Interesting. When will we find out more about this, you think?
I'm hoping in about maybe 3 to 6 months.
Okay.
We're in kind of like active explorations right now in terms of the right model, financial model, business model, distribution models.
Got it. That's very cool. So looking through these initiatives, I suppose if you hit your target, the liability base would shift because you do have to, your NIM margin will probably compress. I'm guessing it goes from 7% to, I don't know, 4 or 5%. Let's just,
that's
5%. Okay, good. And then, so that would be 25 million of, net interest income minus your costs might go up a little bit, doesn't matter. So you're going to be playing with, if everything goes well, but not crazy, 20 million of, net profit to potentially Huma token holders next year. Like we discussed before, you're still anchoring for growth, so that 20 million will likely be in treasury redeployed for growth. But over time, can you tell us more about kind of, as you generate more cash flow, what would that mean for Huma stakeholders?
I think a very straightforward one, two options. One is you grow, the other one is you buy back your tokens. That's just a straightforward. Right.
Got it.
We already,
Okay.
of course, we already have actually pretty good. We published another angle is from the staking side. We published our staking proposal and the community in real decade. Then people staking Huma token, you not only get the staking reward, but more importantly, your LP participation get a big boost. And people already did some modeling about those type of Huma token staking, how much yield they can generate. It's actually pretty attractive. I cannot give specific number, but it's very, very good. So if for any of the audience, you can do both token and LP, check it out. It's actually can be a very interesting angle. But to your question, most of those ones, once we have enough money in their foundation, besides growth and reserve, then of course, naturally we're going to spend on buying back tokens.
Yeah, and then going forward, I think this is it might soon be relevant because you could be scaling very quickly as some of these businesses get there. Like, is there a point in your mind, whether it's TAL, whether it's kind of lent volume, is there a point you feel like 500 million, a billion, 5 billion, that the risk profile of your lending would change meaningfully so that you no longer feel comfortable committing to like 0% default or sort of that 1 to 6 day sort of, maturity period? Is there a time where you scale? Is there a point where you scale where you stop, like the risk profile of your lending pool changes meaningfully?
Yeah, I think it's a good question. Go ahead, Richard.
I would say that's actually, at least in foreseeable future, our principle is still going to be keep very tight. And we are not going to at the cost of risk or security for growth. We will continue to put a very heavy focus on risk one because risk management, because there are so many demand there. We can still just be very selective. And because the reason for that one, for purely TradFi people, they understand if you have 1% project risk default, if you give me 2 or 3% extra yield, I buy it. Right? That's built-in risk taken. That's people buy it. But the crypto world, people don't have that mindset yet. So at this moment, if we introduce some, there is some default, people, although the default volume may be small, but people will overreact to it. and people were not reacting in a rational way. So that's why from day one, we have been very careful about prioritizing risk and security from that side.
Yeah, and
Got
you
it.
can imagine like some of that capital coming back is going into different types of like buffer reserves, right? So we do have on the institutional side, for example, something called a loan loss reserve, right? So there's some of the actually money coming in is going into creating that kind of buffer for absorbing, what might be a potential, default in the future. So we're going to build more of those, I think, buffer zones and buffer, layers into the whole thing. But to Richard's point, our goal is to keep the exposure as low as possible. And we are known as a team from our previous, company expertise to actually have managed this, really, really well. We're known as the gold standard, what we have built in the previous, fintech where, we all work together. We built a very, very scalable business that scaled to, more than $500 million in revenues and with one of the lowest, risk default rates in the whole industry. So, that has been kind of like our focus area and expertise area, and we're going to continue to, keep it as a priority.
That's helpful. We cover a lot of the business. We're running low on time as well. I asked for an hour. Is there any other things that really excite you, or anything that we haven't covered yet you wanna sort of cover in the last bit?
We covered a lot of things.
Yeah, we covered a lot of things.
Yeah, we actually cover all the angles. But of course, we talk about a lot of business then. I think most of the ones, when you take up protocol to a new level, most likely it's the platform play. At day one, we always said that Huma as a platform, and then we power all kinds of killer apps. I think that platform building in shape actually in a faster way, especially what we already talked about. I want to underscore it. And the distribution, PST distribution with all the Solana, DeFi ecosystem plug into everything. That get us the level of success we got in 2 months has far exceeded my expectation. I think the impact of that one will be very, very big.
It's like it's like a S die that actually does BD well. I don't know. We'll see.
Yeah. Yeah.
Yeah, and I think on the like other macro, let's say, is to me the growth of the PayFi ecosystem, the growth of this like new category of asset that I believe is going to continue to bring net new inflows on stablecoins and create a very productive use case for them. I think that is going to defy people's belief that stablecoins is only for maybe trading. I think we believe this movement is so much bigger than just like what we're enabling, and having got that flag from Solana Foundation, because Solana Foundation created the term PayFi to define this category that they really believe in, and they built Solana Pay and built a lot of different relationships, and they're really pushing very hard. And they give this flag to us and said, you guys are really at the forefront of this, and you have the right team and expertise and the platform and the capabilities to really like help create adoption. And as much as we focus on Huma's growth, we also focus on the growth of the ecosystem and helping anybody who wants to adopt anything related to PayFi. And we have a lot of old partners, for example. They have millions of users. They have billions in assets in custody, self-custody or otherwise. They all want to enable some kind of payment solutions, and we want to also see our role in that play to help them really quickly find the right solutions, find the right partners, compose the right capabilities, and just build rapidly to create more and more opportunities for people to just adopt what we believe is the main use case of Bitcoin and blockchain.
Last question, I guess. After Circle IPO, like, did you call Jeremy? Like, do you know what he's going to do with that $1 billion? He's going to jam into you, your relationship, it's fostered. Like, I figure I might ask.
Yeah. So Jeremy and I go way back, and actually, quick, maybe fun story. So Circle CTO Lee Fan is a very close friend of Richard. And Lee Fan calls Richard one day and says, Richard, we're looking to hire a chief product officer for Circle. this is like way before we started Huma. Do you have a recommendation, because Richard worked in Silicon Valley and worked with amazing, product leaders, and Richard says, I have this friend and partner and colleague I worked with at Earnin, Erbil, and you should talk to him.
I rank him number 2 PM in the world. Number 1 is Sundar Pichai. And I really enjoy, really appreciate Sundar as a product manager, but Erbil as well. So that's why I referred.
Like Google CEO is hard to compete with, but he was kind enough to put me on number 2, and I got a very serious conversation with Jeremy. I sat at his home, long hours and many conversations with people in a circle. I even started advising some of the team members already, and I really loved what they were doing, and he really sold me on this stablecoin story and what he wanted to do. He had a very clear vision, and I was sold. I was actually ready to jump on board, and then literally as I'm making this decision and just making my mental model to get started on leading that effort with with Jeremy at Circle, Richard calls me and says, "Erbil, did you make a decision?" I'm almost there. I'm thinking about actually joining. And it's let me make it hard for you.
Yeah.
Harder for you.
Yeah.
I think we can do something together that's going to be even more disruptive, right? And that's how we started Huma. And obviously, we talk to Jeremy and the whole team, leadership team, very often, and we congratulate them during the day of IPO. And they're very appreciative, obviously, because we're one of the largest use cases on Circle, real world use cases on Circle, right, on USDC. And they're really bullish about, how we're going to enable this new network they have built, which is the, payment network that they really want to bring it to everywhere in the world. And we are a very critical partner for them because we are the enabler for, either party that's plugging into the network on both ends. So they really want us to plug in and grow with them going forward. So, we're lucky to have partners like that. And
they're gonna step up. They're gonna step up their assistance to you.
Yeah.
Okay. With more money for sure. Great. Good story, by the way. We would have sized up in the private check if you told us that story in the very earlier days. But I don't have anything else.
I confirm that story is true.
It's funny. I don't think the members have any questions. But Richard, Erbil, thank you so much for your time. This is great.
No, thank you, Jason.
Thank you. As usual, every time talking to you is just such a joy.
Thank you.